Hello. Going to talk a little bit about the statement of cost of goods manufactured and cost of goods sold today. So let me go ahead and share the screen. And I went ahead and worked the schedule of cost of goods manufactured. Now, the schedule of cost of goods manufactured, basically what it shows is what moves through work in process during a period. And remember that the three elements of product cost are direct materials, direct labor, factory overhead, and all of these enter into production in work in process. So what we're talking about here is the cost of goods manufactured is everything that moves through work in process during a period of time, typically a month or maybe a year. So we would start off with direct materials, and notice that I've kind of got a heading here, the name of the company, the name of the schedule of cost of goods manufactured, and the date that it covers, in this case for the year ended December 31st, 2021. Now, we start with direct materials. Again, these are the three elements of product cost: direct materials, direct labor, factory overhead, and they all enter into production in work in process, which is kind of the assembly line or where the products are manufactured or made. So raw materials, we start with our beginning inventory, what we start with at the beginning of the period, plus what we purchase would be the total raw materials available for use. We then back out what we end with, and this is the direct materials that were used in the manufacturing process. This would be what would come into or be transferred into work in process during the period. Remember that direct materials are the materials that go right into the product. Like if Nissan were producing a car, it would be the seats and the tires and the transmission and the engine and the stereo. Everything that goes into that car would be considered a direct material. Now, the next component is direct labor, and typically that total will just be given to you. Remember that direct labor is the employees that actually put their hand on the product, that actually put it together. They would be considered direct labor. Now, the last element is factory overhead. And remember that factory overhead is every part of the product of the plant that is not every part of the cost of the plant that is not direct materials or direct labor would be considered factory overhead. And typically it's going to be indirect labor, which would be labor that works at the plant, but does not put their hands on the product. It would also be indirect materials, which would be like shop supplies and things like if you were making a car, maybe nuts and bolts, maybe glue for the carpet. A lot of shop supplies tend to be indirect materials, typically materials that are too small or such a small part that they can't really be accounted for individually, but they're just accounted for in the whole as far as indirect materials. You would have things like repairs to factory equipment, factory utilities, property taxes on the factory, and depreciation expense on the factory and the equipment within the factory. So this would give us our total factory overhead. You add up the direct materials used, the direct labor cost incurred, and the total factory overhead cost incurred, and you come up with your total manufacturing cost. Now, we would add that then to work in process in order to get the total cost of work in process. We would back out what's there, what's still left in working process, which hasn't been completed, and we would come down to cost of goods manufactured. And remember that the cost of goods manufactured is everything that's moved through work in process during the period that's been completed and moved on to finished goods. That's basically what the cost of goods manufactured is. Everything that's moved through work in process during the period and gone on to finished goods. Now, there was one other thing I wanted to talk about, and that's cost of goods sold. And cost of goods sold would be a section on the income statement. You would basically have sales less cost of goods sold gives you your gross profit. And your gross profit is basically your markup on the goods that you sell, also known as gross margin. Sometimes you'll see it as gross profit or gross margin. either one. So how you would figure cost of goods sold is it would be your beginning finished goods inventory. Remember that the finished goods account is the account that represents all the goods that have been completed and are waiting to be sold. So it would be your beginning finished goods inventory plus your cost of goods manufactured, which again comes right off the cost of goods manufactured statement. And that gives us our goods available for sale when you add those two together, less your ending finished goods inventory gives us our cost of goods sold. So in essence, cost of goods sold is everything that's moved through finished goods during the period and has been sold. It's moved out of finished goods and over to cost of goods sold. Okay. So this is basically kind of also notice the relationship between the two, that cost of goods manufactured would need to be prepared first because it is part of your cost of goods sold, as you can see here. Thank you and have a great day. Bye-bye.